So guys, today we would be solving this question of partnership admission. What do you understand from this line? The value of goodwill of the firm to be calculated on the basis of C's share in the profits and the capital contributed by him. Do you understand anything out of it, guys?
Sir, about hidden goodwill.
Yes, very correct. It is about hidden goodwill. Am I clear, guys, all? So let's do this. Let me do this and then you will understand. But yes, we have already seen this, guys. In case of hidden goodwill only, on the basis of new partner's profit share and capital contributed by him, we calculate goodwill of the firm. Right? But before that, guys, we also need to calculate sacrificing and gaining proportions. So I'm doing that first. Old proportion of A and B is 4:1. Sorry, old ratio. And of C it is 0. So old proportion of A is 4/5. Of B it is 1/5. Of C it is 0. Now new ratio is already given to us in the question, that is 2:1:1. So I am writing that 2:1:1. So new proportion is 2/4, 1/4 and 1/4. So sacrificing or gaining proportion of all the partners, that is old proportion minus new proportion, would be, for A it is 4/5 minus 2/4. For B it is 1/5 minus 1/4. And for C it would be 0 minus 1/4. Correct, guys, or not?
Yes, sir.
LCM of 5 and 4 is 20. 20 divided by 5 is 4, 4 into 4 is 16, minus sign, 20 divided by 4 is 5, 5 into 2 is 10. So it is 16 minus 10 by 20. Here also LCM is 20, 20 divided by 5 is 4, 4 into 1 is 4, and 20 divided by 4 is 5, 5 into 1 is 5. So it is 4 minus 5 divided by 20, and this is minus 1/4. So here we have 6/20, which is sacrifice. Here we have minus 1/20, and here we have minus 1/4. It means here A is sacrificing 6 by 20, B is gaining 1 by 20, and C is also gaining 1 by 4. Correct or not, guys?
Yes, sir.
Please note this down fast all. Determining is profit or loss upon revaluation. So for that, wherever there is any change in the value of an asset, that we have to take care, that we have to consider here. And these 3 points, it is not given. In point number D and E only this information is with us. The D point says that the furniture which was undervalued by rupees 600 now to be brought up to its actual value. Means the furniture that you find here is undervalued by rupees 600. So we have to bring its value up to its actual value. It means its actual value is 4600. So we have to increase furniture by rupees 600, and increasing value of an asset is our profit. So that I am writing in positive as 600 without any sign. Have you understood this, guys, or not?
Yes, sir.
Everyone?
Yes, sir.
Furniture was undervalued. Now we have to bring it up to its actual value, right? Again, here this idiom clearly says that we have to increase the value of furniture. Now next thing what we have here is total insurance premium paid. Whatsoever it was paid, out of that 3400 is prepaid. Means now we have to record prepaid insurance of 3400. That is again increase in an asset and denotes profit. It means there is a profit upon revaluation of rupees 4000. Have you got this, guys, or not?
Yes, sir. Yes, sir.
Yes, sir. Yes, sir.
So now we can determine capital employed by the old partners A and B. There are two formulae for it. Both I have explained you. I am starting it from the liabilities side. So capital employed by old partners is equal to old partners capital. We do not have any reserve and surplus here in balance sheet in the liabilities side. We have revaluation profit, so that I am adding here, for which I calculated the profit or loss upon revaluation, and then from this we will subtract investments, goodwill, existing goodwill, and accumulated losses. Out of these three, we have only one thing here, that is goodwill of rupees 1000. We do not have investments here, we do not have any accumulated losses in asset side. So I am subtracting goodwill, guys. Old partners capital is 20 and 15, 35,000, and goodwill is of rupees 1,000. So 20,000 plus 15,000 plus revaluation profit of 4,000 minus goodwill of 1,000. That is 35 and 39, and minus 1 is 38,000 is capital employed by old partners. Correct guys or not?
Yes.
Now total capital employed including capital of the new partner is 38,000 plus new partner's capital, and how much C is bringing in for capital is rupees 16,000. Correct?
Yes.
So that is rupees 54,000. So we have determined total capital employed of the firm also including capital of the new partner. This is 54,000. Now C's share in profits is 1 by 4 and the same as his gain. We know that whatsoever is the new partner's profit, the same as his gain, because earlier he was getting nothing. For 1/4 share in profits, he is bringing capital of rupees 16,000. So total capital of the firm should be C's capital into reciprocal of his profit share. This all guys we have already seen in goodwill valuation chapter. C's capital is 16,000 to reciprocal of his profit share is 4 by 1. It means total capital of the firm should be 64,000. Have you got this guys or not?
Yes, sir.
So goodwill of the firm, that is hidden goodwill of the firm, is should be capital minus actual capital employed. Should be capital is 64,000. We have just determined should be capital 64 and actual capital employed is 54,000. So 10,000 is hidden goodwill of the firm. Have you got this guys or not?
Yes.
Yes,
I'm
sir.
asking all guys.
Yes, sir. Yes, sir.
So what we did here is determination of firm's goodwill. Now you all have noted this down till here guys. From here to note this down. Please do it. Done guys, note it down everything till here.
Yes, sir.
Yes, sir.
Everyone, guys?
Yes, sir.
So C's share in firm is 1 by 4. It means C's share in goodwill of the firm is goodwill of the firm into his share, that is 2500 rupees, which he could not bring. Got this, guys, or not?
Yes.
Yes, sir.
Good. So guys, now journal entries. The first entry would be cash account debit to C's capital account. How much capital has he brought? Is 16,000. The second entry would be for compensating sacrificing partner by the gaining partners. And here we have the two partners who are gaining. One is C and one is B. Right? You know this. Both B and C have gained. 1 by 20 is gain of B, 1 by 4 is gain of C. And sacrifice of A is 6 by 20, which is nothing but sum total of the two gains. So if you add 1 by 20 and 1 by 4, you will get 6 by 20 only. Because this 1 by 4 can also be written as 5 by 20. 5 by 20 plus 1 by 20 is 6 by 20. So total sacrifice always remains equal to total gain. You all know this, guys. Right? So the gaining partner is C, for which we will debit his current account, not the capital account. This is what we do for the new partner, whether for the amount of goodwill that he cannot bring, whether the firm follows fluctuating capital method or fixed capital method. This is what we do, guys. But for any of the old partners who is also gaining, we debit his capital account if we do not have any information as which method of capital they follow. And the same we do with the sacrificing partner. Am I clear, guys, or not?
Yes.
Yes, sir.
10,000 is the goodwill amount, and gaining proportion of C is 1 by 4. So with 2500 rupees his current account would be debited. Right? $10,000 is goodwill amount, and 1 by 20 is gain of B. That is with rupees 500 we will debit B's capital account, and 10,000 is firm's goodwill into sacrificing proportion of A, that is 6 by 20, means with 3,000 we will credit A's capital account. I hope, guys, you have understood this. This all I have already explained you very well in detail. Yes or no?
Yes, sir.
Yes, sir.
Good. So guys, please note down the two entries. Gaining partners C and B, they both have compensated to the sacrificing partner A. So you all have noted down this much, guys, right?
Yes, sir.
Yes, sir.
Complete the narration of the second entry, guys. Now I am passing the entry of revaluation. Here we do not have any revaluation loss. We have only profit. So in the fourth entry, whatsoever is the credit balance of revaluation account, that is 4,000, would be distributed among the old partners in their old ratio, and old ratio is 4:1. This one. For that, we will debit revaluation account and credit old partners capital accounts. $4,000 divided by 5 is 800. 800 into 4 is 3,200 and 800. Got this, guys, all or not?
Yes.
Yes, sir.
Now in this question we do not have accumulated profits, we do not have accumulated losses. For newly valued goodwill we have already passed our second entry, right? So now we are left with only one adjustment, that is for existing goodwill, which needs to be nullified or written off, for which we will debit old partners capital accounts and will credit existing goodwill account. Existing goodwill has balance of rupees 1000 which will go in 4:1 to the old partners. That is rupees 800 to A and rupees 200 to B. So this is guys our fifth entry. And with this guys we are done with all the journal entries. So start noting it down from entry number 3.
Yes, sir.
Yes, sir.
So guys, please make revaluation account as well. So guys, have you made revaluation account also?
Yes, sir.
Yes, sir.
Everyone?
Yes, sir.
Yes, sir.
Now next thing is partners capital accounts. So here we have to first write the capital balances given to us in the question in the balance sheet, and that is 20,000, 15,000 respectively for A and B. Then A's capital was created for his proportionate share in goodwill. Why? Because he sacrificed it towards both B and C. So you will write by C's current account and by B's capital account. Goodwill amount was 10,000 and C's share is 1 by 4. So 10,000 to 1 by 4 is 2,500 and 10,000 to 1 by 20 is 500. So this is how we have created A's capital. B's capital account would be debited, for which we will write here to A's capital account. B's capital account was debited with rupees 500. Before this, I should have also written or recorded the capital brought in by C, that is rupees 16,000. Now for revaluation profit, we will credit partners, old partners capital accounts. Revaluation profit was 4,000, out of which 3,200 went to A and 800 went to B in 4:1 and nothing to C. and for existing goodwill we debited old partners capital accounts with 800 and 200 respectively. So we have done, guys, every posting in partners capital accounts out of the journal entries wherever partners capital accounts were involved. I hope, guys, you are getting this.
Yes, sir.
So now we will determine the balances of capitals of the three partners, for which I am doing the total of trade side for each of the partners. So it is 23 and 26,200. Here it is 15,800 and here it is 16,000. The same I have written on the debit side in total column. 26,200 minus 800 will give us closing capital of A, that is 25,400. For B, 15,800 minus 700, that is 15,100. For C, his capital will remain intact, and this is the reason, guys, why for amount of goodwill that the new partner cannot bring in, we do not debit his capital but we debit his current account. Why? So that his capital brought in by him remains intact, does not get disturbed. Please remember this, guys. This question is asked in Viva. Have you understood what I said?
Yes, sir.
Yes, sir.
This is the reason why the amount of goodwill that C could not bring in, for that we did not debit his capital account but we debited his current account. Why? So that his capital of rupees 16,000 remains intact. If we debit his capital account, his capital balance now, after doing all the adjustments, would have been lesser than the amount that he actually brought in. So please note this down also fast, guys. We have around 6 minutes. I want to complete the balance sheet also, to make the balance sheet so that the question could be completed today itself. So now, guys, the last thing that we have to prepare is balance of the new balance sheet of the reconstituted firm. For that, I am copying this balance sheet given to us in the question. C was admitted on 1st April 2022. Goodwill will not reflect at all because we have written it off. Cash at bank is 27,000. Since we have debited cash account and not bank account for the cash brought in by C, that is why I am adding here cash in hand. How much cash he brought for his capital is 16,000. There is no change in debtors. Furniture has been brought up to its original value, that is 4,600, and there is no change in buildings. But yeah, one new item has come in asset side, that is prepaid insurance of rupees 3,400. Am I clear, guys, or not?
Yes, sir. Yes, sir.
So the total here would be 27, 16, 43, 52, 56, 956, and 1 lakh 4,000 and 1,000. That is lakh 5,000. And here the capitals of the partners have become 25,400, 15,100 and 16,000. 25,400, 15,100 and 16,000. So this is the total here would be 40 and 56, 500. So 1 lakh 7,500.